Okay, let's dive into this. Boeing's latest earnings report just dropped, and on the surface, it looks absolutely spectacular, like a real blockbuster quarter. But we're going to peel back the layers and see if those headlines really tell the whole story.
So the big question is this the moment everyone's been waiting for? I mean, after years of challenges, did Boeing finally deliver a truly knockout quarter? The initial numbers? Well, they definitely seem to be screaming yes.
And wow, what a number to start with. We're talking nearly $24 billion in revenue in just the last quarter of 2025. To put that into perspective for you, that is their highest quarterly revenue since way back in 2018. That's a massive, massive figure.
And look, this wasn't just a big number. It absolutely smashed what Wall Street was expecting. I mean, beating forecasts by over $1.5 billion? Yeah, that's the kind of surprise that gets everyone's attention.
This quote from CEO Kelly Ortberg really sets the stage for everything we're going to talk about. It just perfectly captures that tension, right? They're making real, tangible progress, but the journey, it's not over yet. So let's start with that progress. Let's look at the good stuff first. All right, so let's get into that progress. The good news, and there's a lot of it, is all about operational momentum. We're talking about factories that are humming, orders that are just flowing in. The core business of building planes is showing some serious strength. And here's a key number that really shows that strength. 600. That's 600 commercial airplanes. That's how many planes Boeing actually managed to deliver to customers in 2025. That's a huge operational achievement no matter how you slice it.
And listen, that number is so important because it's not just some random figure, right? It's a real milestone. This marks their best delivery year in a long time, and that signals a genuine return to form for their production lines.
Okay, now get a load of this number. That's Boeing's total order backlog. It represents over 6,100 aircraft that customers have ordered, but that haven't even been built yet. This is a record, and what it really means is their production lines are basically secured for years and years to come.
This table really gives us a great snapshot of what's going on. You see 737 production has stabilized at a really healthy 42 planes a month. The 787 is stabilizing at 8 a month. They booked over 1,100 net new orders. That's one of their best years ever. And hey, the defense side of the business, it's got a record backlog of its own. It's just a picture of real strength across the board.
But like the CEO hinted, it's not all clear skies. Despite all that incredible operational performance we just talked about, the financial picture, well, it gets a bit more complicated. There's some significant turbulence on the horizon we really need to talk about. Okay, so to understand the biggest issue here, we first need to do a super quick breakdown of something called earnings per share, or EPS. All you need to know is that it's a key number analysts use to judge a company's real underlying profitability, from its actual day-to-day business.
And here it is. Here's the catch. That incredible $9.92 per share profit figure, it wasn't really from selling airplanes. Nope, it was almost entirely due to a one-time gain from selling off Jeppesen, their digital aviation unit. If you take that sale out of the picture, the core business, it actually lost money.
And there's more. The KC-46 tanker program, which is a key defense project for them, took a surprise loss of over $500 million. Why? Well, it was due to higher-than-expected costs in the supply chain and production, and that just ate right into their profits. On top of all that, some of their most important new planes are still facing hurdles. The newest versions of the 737, still waiting for certification. The massive 777X has been delayed again, now pushed to 2027. And, as if that's not enough, they're now looking into a potential engine durability issue. These are all things that are a real drag on future growth. So you've got this mix, right? On one side, great operational news. On the other, some really tricky financial challenges. So how is Boeing planning to tackle all this? Well, that brings us to their long-term strategy. And their strategy, really, it all boils down to two huge moves. First, they're selling Jeppesen for over $10 billion in cash. That's to shore up their finances. But at the same time, they're acquiring Spirit AeroSystems, a key supplier, so they can get control over their manufacturing and quality. It's a classic trade-off, isn't it? A little short-term pain for a lot of long-term gain. And you can hear it right from the CEO. The whole point of this Spirit deal, even with the near-term cost, is to fundamentally improve quality and stability right where it all begins, in the supply chain. Okay, this brings us to the final and honestly the most important part of this whole story, the future.
All of these moves we've been talking about, they're all designed to get Boeing to a very specific and very ambitious long-term financial target.
Now, before we get to the big number, let's quickly define the metric that matters most here: free cash flow. You can think of it as the lifeblood of a company. It's the actual cold, hard cash left over after all the bills are paid and all the investments are made. This is the number that investors watch like a hawk.
So here it is. This is Boeing's official forecast for free cash flow in 2026. Now, I know what you're thinking. After hearing about all that amazing operational momentum, a number somewhere between 1 and 3 billion, it might seem, well, kind of low, right?
Which, of course, leads to the obvious question. With production ramping up and orders just pouring in, why in the world isn't the company expecting to generate more cash next year? The answer is actually pretty fascinating. Well, it turns out that 2026 number is being held down by a whole bunch of temporary issues. We're talking about things like the cash burn from the 777X delays, having to pay compensation to customers for past problems, the cost from buying Spirit, and just making higher investments in their own factories.
And this, right here, is the real story. What management is arguing is that if you can just look past all these temporary headwinds, the underlying business is on a crystal clear path to generate a massive $10 billion in free cash flow every single year. That is the long-term destination they're aiming for.
So that leaves us with the ultimate question, doesn't it? The foundation for a full recovery seems to be set. The strategy is clear, but the path forward definitely still has its share of challenges. So, can Boeing navigate the turbulence that's still ahead to finally reach that $10 billion destination? Well, I guess only time will tell.